So good morning, friends. Yesterday we completed allowances. Okay. So today's target will be to complete the chapter salaries. Okay. And from tomorrow we are going to start with PGBP. Okay. Now pay attention. Yesterday we saw that basic salary, it is taxable. Yes or no? Arrears taxable at on receipt basis. If not taxed earlier, on due basis. Then advance salary taxable on receipt basis. Okay. Then bonus is there, always taxable on receipt basis. Then after bonus we saw allowances. Yes or no? Different types of allowances. We had a discussion about that yesterday only. Okay. So now after that, perquisites are also received by an employee from the employer. But before discussing the perquisites, we'll discuss the retirement benefits. What we are going to discuss? We are going to discuss the retirement benefits. So now pay attention. If we talk about retirement benefits, these are also known as superannuation benefits. Also known as superannuation benefit. Now, what do you mean by retirement benefits? That when the employee is getting retired, at the time of retirement also, he gets few payments from the employer. Like he will get gratuity, he will get pension, he will get leave encashment, or he will get lump sum amount from the provident fund, or he can get payment from approved superannuation fund. Yes or no? Now, along with these amounts, I will also discuss NPS and PPF also here. Okay, because the concepts are similar. So NPS and PPF also I will discuss here. Then VRS compensation he will get, and then retrenchment compensation also he will get. See, VRS compensation and retrenchment compensation are known as profits in lieu of salary. Profits in lieu of, but since they are received at the time of leaving the employment, hence I am covering all these two payments also along with what? Retirement benefits. Now one by one we are going to discuss. First of all, if in my previous year, 1st April 2024, starting from 1st April and ending on 31st March 2025, what happens that if the employee gets retired, on 1st of October 2024, so starting from 1st April till 1st of October, he is working with the employer, and till that time he will get basic salary, he will get allowances, he will get commission, he will get bonus, he will get perquisites. All these payments are given till the time he is working with the employer. But the moment he retires, he gets eligible. As per the contract of employment, he gets eligible to get these retirement benefits like gratuity he will get pension, leave encashment, etc. Okay. So now the first payment which he will get at the time of retirement is what? Gratuity. And if you remember, yesterday only we have done the discussion about the term salary. Salary means any sum, whether in cash or in kind, by whatever name called, given by an employer to the employee. And it also means, as per section 17 subsection 1, the term salary also includes wages, annuity or pension, and number 3, gratuity. So even this gratuity which is received by the employee is treated as what? Salary. So now if the employer will give gratuity to whom? If the employer will give gratuity to the, gratuity is what? Salary. Gratuity is salary. Now if the gratuity is given, gratuity can be given at 2 times. Gratuity can be given while the employee is in service, and it can be given at the time of death of the employee, or maybe on the retirement of the employee. So the gratuity can become due. At the time of death of the employee or at the time of retirement of the employee, whichever happens earlier. For example, I get retired before I die. So my gratuity will become due at the time of retirement. But If this happens, that my retirement was supposed to come after 2 years, after 3 years, but even before my retirement I died, so the gratuity will become due at the time of my death. So that is known as what? Gratuity becoming due on death, even before I retire. So this type of gratuity is known as what? Death come retirement gratuity. Now there are two types of gratuity you have. One, which you receive while you are in. Two, the death come retirement gratuity. Under the Income Tax Act, the gratuity which is death come retirement gratuity, the gratuity which is death come retirement gratuity is exempt under section 10 subsection 10. Under section, meaning that the exemption you are going to get only for this gratuity. Any gratuity which you receive while in service, there is no exemption for such gratuity. And if there is no exemption for that gratuity, meaning that this gratuity will always be fully taxable. Whether you are a government employee or a non-government employee, will not make any difference. Any gratuity received while you are in service will be fully taxable. Now the gratuity which is death come retirement gratuity will be exempt. Will be exempt under section 10 subsection. If you are a government employee, it will be fully exempt. If you are a government employee, it will be fully exempt. But if you are a non-government employee, then also you are going to get exemption under section 1010. But now the exemption will depend that whether you were statutorily eligible to get the gratuity or the employer is giving you gratuity voluntarily. See, in India there is a law. The name of that law is Payment of Gratuity Act. What is the name of that act? So if the employee gets covered under the Payment of Gratuity Act, then as per the requirement of the Payment of Gratuity Act, the employer has to give what? Gratuity. Death come retirement gratuity has to be given, because there was a requirement of POGA and the employee was covered in POGA, Payment of Gratuity Act. So since you were covered in Payment of Gratuity Act, and that is the reason why you are getting the gratuity, that gratuity will also be exempt, and the amount of exemption will be A, B, C, whichever is lower, whichever is. But sometimes it might also happen that the employee was not covered by Payment of Gratuity Act. Employee was not covered by Payment of Gratuity Act, but still the employer might give the gratuity, death come retirement gratuity. This gratuity is not statutorily given. This gratuity is given voluntarily. Yes or no? So even if the employee is not covered by Payment of Gratuity Act, still he is getting what? Gratuity. Yes or no? Then that gratuity will also be exempt. A, B, C, whichever is lower. A, B, C, whichever is. So now tell me, if the employee is covered by POGA, I am talking about which type of employees? Non-government employee who is covered by POGA. Is he receiving gratuity? Is he receiving death come retirement gratuity? So his gratuity will be exempt under section 1010. How much? A, B, C, whichever is. A, actual amount of gratuity. A, actual amount of gratuity. B, maximum 20 lakhs. And C, the amount as per POGA. Amount as per. And how much amount the POGA says? It says that 15/26 of your last drawn salary per month for every year of your service should be given to you as gratuity. So this law says that 15/26, meaning 15 days salary based on your last drawn salary, should be given to you as gratuity for every year of your service. Yes or no? Now this 15/26 is what? This is constant. 15 days salary. 15 days based on last drawn salary. Last drawn salary means the salary which you received from your employer during the last month, immediately preceding to the month of your retirement. So the month of your retirement was August. In the August month you are getting retired. Forget about the August month. Forget about the, we are going to check the immediately preceding month. Which month? July. So in the month of July, whatever basic and DA you received, whatever basic and, remember for POGA, We are calculating exemption for the employees who are covered by POGA. So in this case, whenever you will calculate the limit of exemption, at that time you will take basic plus DA. Everywhere in the calculation we are supposed to take basic DA in terms and turnover commission. Basic DA in terms and turnover commission. But whenever you will calculate the gratuity exemption for the employees who are covered by POGA, you are not supposed to take basic DA in terms and turnover commission. You are supposed to take basic and whether this DA is in terms or this DA is not in terms. Whether this DA is in terms or this DA is not in terms. You will take all the DA. Yes or no? So this basic and DA for which month? For the month immediately preceding to month of. So this will be your last drawn salary. This will be your. So now this last drawn salary is not given for 30 days. This is given for 26 days. Why? Because in a month there are 4 Sundays. Exclude 4 Sundays. Excluding 4 Sundays, this salary is given for how many days? 26. So divide this salary by 26 and multiply it by 15. You get 15 days salary based on last drawn salary. Yes or no? Now multiplied by how many years? Number of years of service. So now see, here the number of years of service, meaning the date on which you started working for your employer. Starting from that day till today, till the date of retirement, how many years of service you have given to your employer? For example, you have given 25 years of service. How many years? Then this will be taken 25 years. But for example, you have given a service of 23 years and 4 months. 23 years. 24th year of service. Have you given the full 24th year of service? Or only 4 months? 23 full year of service. And 24th year service you are giving, but within 4 months, your retirement came and you got retired. So 24th year, you could not provide the entire year of service. Ignore this 4 months. Ignore this. But if you have given a service of 23 years and 8 months, meaning the service in the 24th year was more than 6 months, then this 24th year will be taken as full year. Fraction of the year will be taken as full year. Then this 23 years and 8 months will be treated as 24 years of service. Yes or no? And what if 23 years and 6 months exactly? 6 or less. That fraction will be ignored. 6 or less. The fraction will be. And if the fraction is more than, then that fraction of the year of service will be treated as full year of service. Yes or no? Now see, what did I say? If you are receiving gratuity while you are in service, it is fully, whether you are a government employee or a, if you are receiving death cum retirement gratuity, which gratuity? Death cum retirement gratuity, and you are a government employee, then whatever amount of gratuity you are getting 5 lakhs, you are getting 10 lakhs, you are getting 15 lakhs, you are getting 50 lakhs, whatever amount of gratuity you are getting, that will be fully exempt. But if you are a non-government employee receiving death cum retirement gratuity, then the death cum retirement gratuity will be exempt for you under section 1010. Depends that how much exemption you will get, depends on whether you are covered by POGA or you are not covered by POGA. If you are covered by POGA, how much exemption you are going to get? A, B, C, whichever is lower. A is actual amount of gratuity, B is maximum 20 lakhs, and C is amount as per POGA. C is amount as per, and what is the amount as per POGA you should get as gratuity? 15 by 26 of your last drawn salary per month multiplied by number of. Yes or no? 15 by 26. You understood? Last drawn salary you understood? In last drawn salary, what are you going to take? Basic and DA, whether in terms or not in terms. And number of years of service, means number of completed years only of your service. But if any year of service is in fraction, that fraction of the year of service will also be taken as full year of service, provided that fraction of the year of service is more than 6 months. Yes or no? Now what if you are not covered by POGA? You are not covered by, and still your employer is giving you gratuity. Then that time you are going to get the exemption. How much exemption? Same. A, B, C, whichever is A, B, C, whichever is. A is actual amount of gratuity. B is maximum 20 lakhs. Yes or no? And C will be amount as per POGA. No. Since you are not getting covered by POGA, amount as per POGA will not be your limit C. Now the limit will be given by Income Tax Act only. Now how much the Income Tax Act is saying that you should get exemption. Maximum gratuity which you should get as per the Income Tax Act. If you are not covered by POGA, if you are not covered by, so the Income Tax Act says that the maximum gratuity which you should get as death cum retirement gratuity should be half of the average salary per month. Half of the, for every completed year of your, you will take only the completed year of service. You will take the completed year of service only. Any fraction of the year, whether the fraction is more than 6 months or equal to 6 months or less than 6 months, will be completely ignored. So 23 years, 4 months will be taken as 23. 23 years and 6 months will be taken as 23. 23 years and 11 months also will be taken as. You are going to take only the completed year of service. Now to calculate this gratuity exemption amount, you are going to take 15 by 30 of your last drawn salary. You will take the salary of the last month. No, you are going to take the salary of last 10 months. How many months? Last 10 months, whatever was your basic salary. Last 10 months, whatever was your DA in terms. Last 10 months, whatever was your turnover commission. So 10 months immediately preceding to the month of retirement. So ignore the month of retirement. Immediately prior to that, 10 months you are supposed to take. For those 10 months, whatever basic was there, DA in terms was there, turnover commission was there, you will add all this. You will get 10 months salary. You will get, and then you divide it by 10. There will be average salary. It will be treated as average salary. So this average salary which you have received during last 10 months, which you have received during the last 10 months, yes or no? 15 days salary out of this. 15 days. But wait, this average salary is for a month. See, the average salary after dividing it by 10 months is a per month amount. Is a divided by 30. Divided by, no need to exclude 4 days, 4 Sundays. Yes or no? No need to exclude. If this is for a month, and month has how many days? 30 days. Yes or no? So you have got the salary also for Sundays. So no need to exclude Sundays. Divide by 30, you will get per day salary. Multiplied by 15, you will get 15 days salary. Yes or no? So this will be your limit C. This will be your limit A, actual amount. B, maximum 20. And C, amount as per POGA? No, amount as per Income Tax Act. That is 15 by 30 into average salary per month into number of completed years of service. And this will give you limit C. This will give you limit. Now this limit C, limit B or limit A, whichever is lower, will be the amount of exemption. Yes or no, sir? Did you understand this part? This was the end of gratuity. So in gratuity, you are supposed to remember only this much. Okay. Now, after gratuity, can your employer give you pension? Can your employer give you pension? What is the meaning of pension? On a regular basis. And this payment is specifically made after, also known as annuity. Also known as, so can your employer give you a regular payment after your retirement? Any example we can take. We can take 10,000 rupees per month. How much? Now, after your retirement, you are getting 10,000 rupees. 10,000 rupees. That is known as uncommuted pension. That is known as, that will always be taxable whether you are a government employee or a fixed amount of pension given on a regular basis. Fixed amount of pension given on a, that is known as uncommuted pension. That is fully taxable whether you are a government employee or a non-government employee. Yes or no? Now pay attention. Now, out of this fixed amount, which you were supposed to get, how much you were supposed to get? 10,000, 10,000, 10,000, 10,000, 10,000 every month after your retirement. So, for example, your date of retirement was 1st of October 2024. So on this date you are getting retired, and how much monthly amount your employer is giving? 5,000. So you are going to get 5,000 after the retirement. Can I say in the October you are going to get 5,000? Hello? November also you are going to get 5,000. December also you are going to get 5,000. Every month after your retirement you are going to get 5,000. This is known as uncommuted pension. This is known as, it will be fully taxable whether you are a government employee or a non-government employee. But what happens on 1st of February 2025? 1st of February 2000, you went to your employer and you told that employer, I am waiving off my 5,000 rupees. I am waiving off my monthly pension. Please give me a lump sum amount against that. Please give me a... So you are not interested in taking the monthly amount in future. You want your employer to give you a lump sum because you want to waive off the entire amount of your monthly pension. Possible or not possible? Hello? So can you waive off the entire monthly amount to get a lump sum? That is known as fully commuted pension. Because full amount of your monthly pension you have commuted to get a lump sum. Yes or no? Now, is it possible that you tell your employer that instead of waiving off 5,000, I want to waive off 60% out of 5,000? Yes or no? So, in the month of February, you went to your employer and you told your employer that out of my monthly pension of 5,000, I want to waive off 60%. I want to waive off. Are you waiving off entire 5,000 monthly pension or only 60%? So your employer agreed and he waived off your 60%. Yes or no? Against that he gave you a lump sum. This is commuted pension. This is. But did you commute your entire monthly pension or only part of that? So this is partly commuted pension. This is. What if you could have commuted the 100% also? Then in that case, a lump sum amount would have been received. Then that lump sum amount would have been your fully commuted pension. But whether it is fully or it is partly, you will call this lump sum as commuted pension. You will call this lump sum as. Now, did you understand what is commuted pension? What is commuted pension? The monthly pension which you are receiving from your employer, fixed amount on a regular basis. This monthly pension which you are receiving, you are waiving off either this full amount of monthly pension or any part of this monthly pension if you waive off. And against this waiver, you are getting some lump sum. That lump sum is known as, if full amount is commuted, full amount of monthly pension is commuted, waived off, you will get fully commuted pension. Yes or no? If part amount of this monthly pension is commuted, then you get a lump sum that is known as partly commuted pension. Yes or no? Now, whatever commuted pension you are getting from your employer, whatever commuted pension you are getting from your, if you are a government employee, full amount of your commuted pension will be exempted. Full amount of your commuted pension will be exempt. But if you are a non-government employee, if you are and receiving what? Commuted pension, then your commuted pension will be exempt. But how much exemption you are going to get depends whether you are receiving gratuity or not receiving gratuity on retirement. Yes or no? So tell me one thing. Simple thing I am asking, simple thing. If commuted pension, which pension is received by government employee, what are you going to do? What are you going to do? Fully, under which section? 1010A. Whatever amount is there, full amount will be exempt without any monetary limit. Now, if the commuted pension is received by non-government employee, you are supposed to see that whether this non-government employee is receiving gratuity or not receiving gratuity, yes or no? So at the time of retirement, if you are receiving gratuity also, then your commuted pension will be exempt under section 1010A. How much? Either the actual amount of commuted pension, yes or no? Either the actual amount of commuted pension or maximum 1/3 of fully commuted pension. What did I say? 1/3 of. This is the maximum limit. To the extent of this only, your commuted pension can be exempted. To the extent of this limit only, your pension can be exempt. Either this amount or the amount which you have received actually. Whichever is lower, whichever is will be exempted. And this limit of 1/3 will be applicable only if the government employee is a non-government employee receiving gratuity also at the time of retirement. Now, what if he is not receiving gratuity at the time of retirement? Still his commuted pension will be exempt under section 1010A. How much exemption he is going to get? Amount, actual amount of commuted pension, yes or no? Or maximum half, 1/2 of what? Fully commuted pension. 1/2 of. See, the only difference is here you are getting 1/3 and here you are getting half. The only difference. If you are receiving gratuity, if you are receiving gratuity, then you will do 1/3. And if you are not receiving gratuity, then you are going to do half. Half of what? And 1/3 of what? Can I say this commuted pension you are getting after commuting 60%? How much you got? 3 lakhs. In our example, we saw that you got 3 lakhs after commuting full pension or after commuting only part. So 3 lakh is your commuted pension, but you are not getting that pension after commuting full amount of pension. You are commuting only 60%. So if you do 1/3 of this amount or half of this amount, your answer will be wrong. Why? Because you are not taking 1/3 of fully commuted pension. You are taking 1/3 of partly commuted pension. You are taking half of partly commuted pension. Your answer will be wrong. Now what you are supposed to do here? You are supposed to first calculate the fully commuted pension. You are supposed to first calculate. How will you calculate? Simple. If 60% is commuted and you are getting how much? And if 100% would have been commuted, how much you would have got? Can you do a cross multiplication? Yes or no? So that 5 lakh amount will be there. If you would have commuted your entire monthly pension, then you would not have received 3 lakh. You would have received, that is your fully commuted. How much you will do? 1/3 of that fully commuted pension. How much is the amount? 1,66,667. 1,66,667. And how much is the actual amount of commuted pension? 3 lakhs. So 3 lakh or 1,66,667, whichever is lower. So lower is this amount, no? So exemption will be 1,66,667. So how much pension you are receiving? 3 lakhs. How much you are receiving? And how much is the exemption? 1,66,667. That will be reduced and the balance amount will be taxable. Yes or no? What was your fully computed pension? 5 lakhs. Do the half of that. So you will get 2 lakh 50. 2 lakh. And how much was your actual amount of commuted pension? 3 lakh. So 3 lakhs or 2,50,000, 3 lakh or whichever is. So how much will be your exemption? So how much is the commuted pension you have actually received? 3 lakh. And how much is the exemption? So the balance amount of 50,000 will be taxable. Will you be able to do this calculation? Yes or no? Now tell me, in my example now, in my example which I took, okay, if I talk about my example here, see, this is your previous year, this is your previous year, okay, no? We'll start from 1st April 2024, and on 1st of October 2024 you are getting retired and monthly pension 5,000 is offered. So from October onwards you are going to get 5,000, 5,000, 5,000, 5,000. Then on 1st of February 2025 you commuted 60% of your monthly pension for rupees 3 lakhs. Now from this example, whatever I have taught you so far, from this example you are going to tell me how much is the uncommuted pension. How much is the uncommuted pension in this year? Come on, tell me. You are going to give me the answer fast. $32,000 wrong. Please pay attention. When are you getting retired? 24,000 is the correct amount. When are you getting retired? Tell me. October. And how much pension was offered? So will you get 5,000 in October? Yes or no? 5,000 in November, 5,000 in December, and 5,000 in. Can I say from October to January you have not done any commutation? Yes or no? So October to January, 4 months, how much you are getting? 5,000, 5,000, 5,000, 5,000, meaning 20,000. Now February, 1st of February, have you commuted entire 5,000 or only 60%? Meaning 40% is not yet commuted. 40% is not yet commuted. So in the month of February, you are supposed to get 5,000, but since you have already commuted 60%, you are going to get only 40% in the month of February. Yes or no? So 5,000 into 40% will be? So 2,000 monthly pension you are going to get for February and March. Yes or no? So 2,000 for February, 2,000 for March. How much you are going to get? 4,000. 4,000 uncommuted pension for February and March, and 20,000 uncommuted pension from October to January. How much is your uncommuted pension? See, 24,000 will be your uncommuted pension. Whether you are a government employee or a non-government employee, in both the cases, this 24,000 will be taxable. Yes or no? But don't you think that during this year, you are getting commuted pension of 3 lakh also? You are getting commuted pension of. So this commuted pension, if you are a government employee, then this entire amount of 3 lakh will be, so entire 3 lakh will be exempted, and how much amount will be taxable? 0. So government employee during this year will have uncommuted pension of 24,000, uncommuted pension of, and commuted pension 0. Taxable amount 0. So total pension taxable for him will be 24,000. Yes or no? Yes or no? So if the employee is a government employee, full amount will be exempt. So taxable amount will be nil. Taxable amount will be nil. So for government employee, uncommuted pension was 24. Taxable commuted pension was nil. So total taxable pension will be 24,000. Yes or no? But what if this 3 lakh is received by a non-government employee? Non-government employee, tell me, receiving gratuity, will that 3 lakh be exempt? Yes. To the extent of 1/3 of fully commuted pension, or the amount which he has actually received, whichever is. So this 3 lakhs which he has actually received, or one third of fully computed pension, which you calculated how much? 5 lakhs. So 5 lakh into one third will be 1,66,660. So 3 lakh or 1,66,667, whichever is. So how much will be the exemption? So out of the pension which you have received, this will be exempt, and how much will be taxable? 1,33,333. Yes or no? So this 1,33,333 will be taxable, and the uncommuted pension was same, no? 24,000. That amount plus 1,33,333 will be taxable. So how much will be the total taxable pension? 157,333. If you are a non-government employee, this uncommuted pension is taxable, and commuted pension of 3 lakh will not be exempted fully. Out of that 3 lakh, you will take the exemption of 1,66,667, and the taxable amount will be 1,33,333. Yes or no? So the total taxable pension will be 157,333. Got it, sir? Now, what if you are a non-government employee not receiving gratuity? That 24,000 uncommuted pension, if you would have received, it would have been taxable for you also. But your commuted pension of 3 lakh will not be exempt up to 166,667. Now it will be reduced. Now it will be exempt up to half of fully commuted pension. So half of fully commuted pension will be 2,50,000. 2,50,000 or 3 lakh, whichever is lower. So the exemption will be 2,50,000. So out of 3 lakh, 2,50,000 will be exempt. So how much commuted pension will be taxable? 50,000. And how much uncommuted pension will be taxable? Both taken together, how much will be the total taxable pension? Will you be able to calculate like this? Yes or no? This type of information can be given in the question. From this information, you are supposed to calculate like this. Yes or no? This was your pension. Will you remember this much in pension? Okay. Now pay attention. Now we are going to leave encashment. What is the meaning of leave encashment? See, in a year, how many days are there? Out of those 365 days, 52 Sundays are there. How many? 52 Sundays. So, after removing 52 Sundays, 313 days are there. How many days? And out of 313 days, 13 days public holidays if we reduce. Like Deepavali is there, Pongal is there, yes or no? These are public holidays. So, in a year, total 13 public holidays would be there. Approximately, yes or no? Sometimes it might be more also, sometimes it is less also. But on an average, it is 13 days. So, 13 days, public holidays reduce. So, tell me, how many days are left in a year? These 300 days are known as working days. These 300 days are... See, the employer cannot expect that you are going to come on Sunday or a public holiday. So, definitely, these two holidays are excluded out of the entire year. So how many days are left now? 300 days are left, which are working days. Which are? These 300 days you can come and work for the employer. Yes or no? But expecting that you are going to work for these 300 days is too much. This expectation is absurd, because definitely out of these 300 days, sometimes some employee will have some personal work. He will get sick also. Yes or no? Or for example, he will have some family commitments also. So there are many things for which the employee might not be available to work for these 300 days. Yes or no? So the employer from his side, the employer from his side might give you some extra leaves. These are the leaves which everyone will get. Every employee will get. Yes or no? All across the industry, all the employees will get a leave of Sunday and leave for. But the leave which the employer will give from his side is known as leave allowed by the. So if you go to any company, that company might give you 20 days leave from its side. Employer will give 20 days leave from his side. That okay, out of 300 days, no, take 20 days leave extra from my side. So that is the leave allowed by the employer. Some employer might give 30 days leave in a year. Some employer might give 45 days. So it depends on employer to employer and how much negotiations you both have done at the time of joining. Yes or no? So for example, your employer has given. So these are the leaves allowed by the as per employer's rules. So employer has a rule that we are going to give 40 days leave in a year. Don't come for these 40 days. Still you are going to get the salary of these 40 days. Yes or no? Now, every year 40 days leave will be allowed. Every year 40 days leave will be allowed. Now, if you want, you can take the full 40 days leave. If you want, you can take full 40 days leave. Yes or no? But still, you are going to get the salary for those 40 days. Yes or no? So, these are known as paid leaves. These are known as paid leaves means the leaves for which you get paid salary. Yes or no? Even if you don't come on that day, still you are going to get the salary for that day. Getting my point? Now, example, out of the 40 days, if the employer is taking 30 days leave, how many days leave employee is taking? 30 days. So how many leaves he is saving? How many leaves he is saving? So this year, employer gave you 40 days leave. You took how many days leave? So 10 days leave you have saved. Meaning that on those 10 days, even if you would have taken a leave, you would have received the salary for those 10 days, which you have saved. Yes or no? So now what will happen? These 10 days, did you take the leave or you came for work? You came for work. Yes or no? You wanted, if you would have wanted, you would have taken the leave for these 10 days and still you would have got the salary of these 10 days. Yes or no? But you did not take leave for these 10 days. So what the employer does? Employer tells you that even if you would have taken the leave on these 10 days, I would have to pay you the salary of these 10 days. Yes or no? So take the extra salary for these 10 days. That is known as leave encashment. That is known as leave encashment. So the 10 days for which the leave you were supposed to take and you were supposed to get the salary also for these 10 days. Yes or no? Did you take any leave for these 10 days? No. So the employer will give the salary of these 10 days in cash in your hands. Extra amount of salary you are getting. Now, this encashment might happen while you are in service. This encashment might happen while you are in this year. After the year will end, we'll sit together. Okay, employee will sit together. Employer will ask you, how many days leave I gave you? 40. How many leaves you took? How many leaves you have saved? Take this 10 days salary extra. While you are in service, that time only the leave is encashed. Yes or no? But some employer will not give you the leave encashment while you are in service. These leaves will be accumulated every year. These leaves will be accumulated every year. So this year, how much leave you have saved? How much is the leave to your credit? 10 days. Next year, it might be 15 days. Next to next year, it might be 12 days. Next to next year, it might be 7 days. Every year, leave allowed minus leave taken. Leave allowed minus leave taken. So every year, your leave which you have saved, leaves to your credit, every year those leaves will be calculated. Now when you will retire, when you leave the company, at that time, the total leaves to your credit, total leaves to your, during your tenure of service, how many leaves you have saved every year, yes or no? Total of that will be done and that will be encashed at once, at the time of your retirement or at the time of your separation, or even before you retire, you die. So at the time of death, that amount will become due. Getting my point? Hello, sir. So what will happen? Can these leaves which you are saving, can these leaves be encashed while you are in service? Yes or no? Can these leaves be accumulated and can these leaves be encashed at the time of your retirement also? So encashment happens at two times. Once while you are in service, and second at the time of retirement, separation or death, whichever happens earlier, at that time the encashment happens. Yes or no? So now see, if the leave encashment happens while you are in, you are getting a leave salary, you are getting a leave encashment while you are in, that will be fully taxable, whether you are a government employee or a non-government employee. Yes or no? But if the leave encashment happens on retirement or separation or death, whichever happens earlier, at that time, if the leave encashment is taking place, then that leave encashment will be fully exempt under section 1010 AA. If you are a, whatever may be the amount of that leave encashment, whatever may be the amount of that leave encashment will be fully, if you are a, and the exemption is given by which section? 1010 AA. Yes or no? 1010 is about gratuity. No, it is about death cum retirement gratuity. Because gratuity is also taxable if you receive while you are in service. Yes or no? 1010A talks about, 1010A talks about exemption for, no, commuted pension. Because uncommuted pension is fully taxable. Yes or no? And 1010 AA talks about exemption for leave encashment at the time of retirement. Because leave encashment while you are in service is fully. Yes or no? So 1010 AA says that the leave encashment at the time of retirement or separation or death, whichever happens earlier, at that time, whatever leave encashment happens in the hands of government employee, whatever amount of leave salary or leave encashment is received, that is fully exempt. What about the non-government employee? What about the non-government employee? Non-government employee receiving leave encashment at the time of retirement. At the time of, will it be exempt? Yes, it will also be exempt under the same section. But the exemption will not be full amount. It will be A, B, C, D. Whichever is A, B, C, D. Whichever is. What is A? You are supposed to take leave credit. So at the time of retirement, how much is the total leave credit? Take that leave credit at the time of retirement, multiplied by average salary per month, multiplied by, that is your limit A. Limit B is 10 months salary. 10 months salary. So average salary you have already calculated, no? Average salary multiplied by 10, you will get 10 months salary. Yes or no? Limit C will be maximum, and limit D will be actual amount of leave encashment. Actual amount of, so 4 limits you are supposed to check. Actual amount of leave encashment, actual amount of maximum 25 lakhs, 10 months salary, 10 months, and the last limit is leave credit multiplied by average salary per month. See, wherever you want to do the calculations, for exemptions, etc. Yes or no? Whenever you want to have this amount, salary, that salary will always be basic, DA in terms, turnover, commission, until and unless specifically mentioned. Always you are going to take basic, DA in terms, turnover, commission. Yes or no? So here also you are supposed to take basic, DA in terms, turnover, commission. For how many months? 10 months. Immediately preceding to month of retirement? No. Date of retirement. Do you remember in gratuity, we calculated average salary? If the employee is not covered by POGA, if the employee is not covered by, we calculated average salary there also. Last 10 months, basic. Last 10 months, DA in terms. Last 10 months, turnover, commission. Add all of them, divide by 10. It is average salary per month. But which 10 month we took that time? 10 months immediately preceding to month of retirement we took there. Yes or no? Here you are not going to take 10 months immediately preceding to month of retirement. Here you are going to take 10 months immediately preceding to date of retirement. 10 months immediately preceding to. Now what is the difference? I'll tell you. See, if you get retired in the month of December, so you can retire on 1st December also. You can retire on 15th December also. You can retire on 31st December also. Yes or no? So when are you when are you getting retired? December month. When are you going to get retired? December month. December month, any date can be there. December month, ignore December month. Ignore the month of 10 months immediately prior to this. Meaning, you will start from November, October, September, likewise. Yes or no? So 10 months immediately preceding to month of retirement. You are going to take for not covered by POGA, gratuity. Yes or no? But here average salary you are supposed to take. But this average salary for 10 months immediately preceding to date of retirement. For example, your date of retirement. For example, your date of retirement was 1st of December. 1st of. So 10 months immediately prior to this date. 10 months immediately prior to, meaning November and earlier 9 months. Yes or no? Hello sir. But what if your date of retirement is 31st December? So you have to take 10 months immediately prior to date of retirement. So entire December month you are going to count. Entire and 9 months prior to that. Getting my point? Hello sir. But what if your date of retirement was 15th of December? Possible or not? 15th of. So half month of December. Prior to that 9 months. And prior to that half more. Getting my point? So half month of December you are going to take. Then prior to that 9 more months. That is 9.5 months. And prior to that half month more. 15 days more. Yes or no? So 10 months immediately prior to date of retirement. This is your date of retirement. So can I say 1st of December to 15th of December? 1st of December to 15th of December. Yes or no? This will be half month. Prior to that November. Prior to that October. Prior to that September. Prior to that August. Likewise, you will calculate 9 months full. And then prior to that half month also. That is going to take 10 months. 10 months immediately prior to date of retirement. Will you remember this? This is the place where the students will commit mistake. So whenever you are there in gratuity, not covered by POGA, not covered by whatever may be your date of retirement, whatever may be your, ignore the retirement month. Take 10 months immediately prior to month of retirement. Yes or no? But whenever you are in leave salary, whenever you are in exemption, you are going to calculate. And for that exemption, you are calculating average salary. Average salary of how many months? 10 months. Average salary of how many months? 10 months immediately preceding to date of retirement. Got it, sir? So, what will you take? You will take basic salary? Yes or no? You will take DA in terms? You will take turnover? Basic, DA in terms, turnover commission of 10 months immediately preceding to date of retirement. So now this 10 months salary you have calculated, divided by 10. You are going to get what? Average salary. This average salary will be used here and this average salary will be used here. Yes or no? Now what are you going to take? Leave credit. So for the purpose of exemption, for the purpose of leave credit, you are supposed to calculate. Now leave credit, how will you calculate? Simple. Leave allowed by the employer every year. In my example, how much was leave credit? Leave allowed 40 days. So it will be given in the question that how many days leave the employer was giving. Employer might give you 20 days leave. Employer might give you 25 days leave. Employer might give you 30 days leave. Employer might give you 40, 45, whatever days leave the employer is giving every year. So that is the leave allowed by the employer. So those days you are supposed to write. Now this leave he will allow every year of your employment. So multiplied by completed years of service, starting from your date of joining till today, till the date of retirement, how many completed years of service you have provided. For example, you have worked for me for 25 years and 7 months. How many years? 25 years and so every completed year of your service, how much leave I was giving you? 40. So 40 days into 25 years. 40 into 25, how much? It will be 1000 days. So during 25 years of your service, the employer gave you how many leaves? He gave you 1000 days leaves. Yes or no? Out of those 1000 days leaves, in 25 years, total leaves you have taken. For example, the total leaves you have taken 800 days. How many days? So out of the 1000 days leaves allowed, you have taken the leaves of 800 days. So how many leaves are remaining? So at the time of retirement, the total leaves to your credit will be 200 days. 200. Now this is leave credit which is available at the time of retirement. This is calculated in what? Days. This is calculated in. But this leave credit in days you cannot bring here. Why? Because the salary is per month. Salary is. So you'll have to convert this leave credit also in months. So 200 days. 200 days leave credit will be converted into months by dividing it by. So leave credit you are going to get in months. How many leave credit you got? 200 divided by 30. You are going to get 6.67. 6 point. Exact 6.67 is your leave credit. But wait. Simple thing. How many leaves your employer was providing? How many leaves employer was providing? As per employer's rule, it was 40. It was now number of years of service 25. Number of years of service, it is 1000. It is how many days leave you took? Example, we'll take example. Example, you took 640 days. 600 and so 640 days leave you have taken. Reduce 640. How much leave credit? 360. Divide by total is 12 months. So as per the employer's rule, as per the how much is the leave credit? 12 months. You calculated 12 months. Yes or no? But under the income tax rules, there is a restriction. There is that your employer can provide maximum 30 days leaves. Maximum for every completed year of. Yes or no? So if based on that 30 days which is given in IT rules, based on 30 days maximum leave which the employer can give, yes or no? If based on 30 days as per IT rules, if your leave credit is calculated, will it be 12 months or it will be some other amount? Some other amount. Yes or no? First of all, what I'll do? Instead of 40, now I will take 30. Instead of 40, I will take 30. How many months? How many years of completed service? 25. Multiplied by 25. It is 700 and 750. And how much leave you took? 640 minus 640. You will get 110. You will get 110 divided by 30. 3 point. Now see, as per the employer's rules, you are getting a credit of leave credit of, But as per the IT rules, as per the, you are getting a leave credit of 3 point. Tell me, for the purpose of exemption, what did I say? For the purpose of leave credit as per employer's rule should be taken, or leave credit as per IT rules should be taken? Whichever is lower. Whichever is. See, your employer will give you leave salary of 12 months only. Because as per employer's rules, how much leave is saved? 12 months. So the actual amount of leave salary which the employer will give you will be for 12 months only. But while calculating the exemption, the leave credit will not be as per employer's rules. It will be leave credit as per employer's rule or leave credit as per IT rules, whichever is lower. So which is lower? 12 months or 3.67? So here you will take 3.67 for the purpose of exemption. Will you be able to do it like this? Yes or no? Now wait. How many days leave the employer was giving? And how much is as per IT rules? So definitely the leave credit as per IT rules will be lower. Definitely the leave credit as per IT rules will be lower. Because this is calculated based on 30 days and this is calculated based on 40 days. Getting my point? But what if your employer was giving you 25 days? How many days? 25 multiplied by 25. 25 multiplied by 25 is 600 and for example, the leaves you took was 510 days. 100 and divide by, so now it will be, this will be 3.83 months. Yes or no? Now as per IT rules, as per IT rules, you will take 30 into 25. It will be 7 and minus how many days leave you took? 510 minus 510, 240 divide by, you will get 8 months. Yes or no? Now 8 months. Now tell me, which is the lowest one? 3.83. So your employer will actually give you leave salary for 3.83 and for the purpose of exemption also you are going to take 3.83. Yes or no? Why? Because the leaves allowed by the employer is less than leaves allowed as per. So definitely the leave credit calculated as per IT rules will be lower than the leave credit calculated as per IT rules. Understanding? Remember this format. Put this format, do the calculation side by side. You will get leave credit as per IT rules and leave credit as per employer's rules. Whichever is lower, that leave credit you are going to use for the purpose of calculating your exemption. Will you remember this? Hello sir. Now pay attention. One important thing I would like to tell you. Do you remember gratuity? Hello. What was the maximum limit? What was the maximum limit for gratuity? 20 lakhs? Yes or no? Do you remember pension? Commuted pension. How much was the maximum limit? 1/3 of fully commuted pension if you are receiving gratuity, or half of fully commuted pension if you are not in receipt of gratuity. Yes or no? And for leave salary, how much was the maximum limit? 25 lakhs. Yes or no? In 3 places, this was the maximum limit. To the extent of this limit only, you can claim the exemption. If you are receiving amount which is less than these limits, then the entire amount will be exempt. But if you are receiving an amount which is more than these limits, then exemption will be to the extent of these limits only. Yes or no? Now see, These limits, which are maximum limits, no, these are all LTME. What did I say? Lifetime maximum exemption. What did I say? I will give you one example. See, 10 years back, 10 years, you retired from one company. You are retiring right now? I'm not talking about right now. 10 years back, you retired from a company. At that time, the company gave you a gratuity of 15 lakhs. How much? So that time, definitely, you would have taken the exemption under section 10(10). Under section. So you calculated the exemption 10 years back. The exemption A, B, C, whichever is lower. The amount of exemption at that time was 8 lakhs. How much? So how much gratuity you actually received? How much gratuity you actually received? And how much gratuity exemption you got at that time? 8 lakh exemption you have already calculated and claimed. Now, after claiming the exemption once in your life, yes or no? After 10 years, you are again getting retired from another company. Possible that 10 years ago you left one company and after that you joined another company, yes or no? And after 10 years working in this company, from this company, right now you are also getting retired. So in the current year, you are retiring from another company. Now this another company is also giving you gratuity. Another company is also giving you. And now this time the amount of gratuity which you are getting is 22 lakhs. How much gratuity you are getting? So tell me, will this gratuity be exempt? Yes. It cannot be said that the gratuity once in your lifetime you have taken the exemption. Now in your life, you cannot take the exemption for the second time. You can take the exemption as many times as you want. So second time also in your life, you are receiving gratuity, and second time also, you are getting the gratuity. That gratuity will also be exempt. But now, to calculate the exemption, what are you going to do? A, B, C. Whichever is A, B, C. Whichever is A, actual amount of gratuity. B, maximum limit of will be reduced by 8 lakhs, which you have already taken in your life earlier. Yes or no? So already taken 8 lakhs. So now the limit of 20 lakhs will not be available. Now the limit of 12 lakhs will be available, because that 20 lakh limit is your lifetime maximum exemption. During your lifetime, you can take the exemption of gratuity n number of times. Yes or no? But all the gratuities exempted by you during your lifetime in total cannot be more than 20 lakhs. All the commuted pensions exempted by you during your lifetime cannot be more than this amount. All the leave salaries exempted by you during your lifetime cannot be more than. This is known as lifetime maximum exemption. So if I ask you, can you take exemption under section 10(10), 10(10)(A and 10(10)AA multiple times or only once? During your lifetime, you can take these exemption multiple times. But the total exemption under these sections during your lifetime cannot be more than these limits. Yes or no? Yes or no? So this is the end of your gratuity, pension and leave salary. Will you remember this, everyone? So now let's move on and let's discuss about retrenchment compensation. Retrenchment means closing off. That is the only case when you are getting retrenched, or any other case can also be there. Layoff, yes, very good. Then company getting amalgamated with another company. That company is saying that we are going to take your business, but we are not going to take your employees. So the amalgamating company will give the business to the amalgamated company. Yes or no? But the employees are not being taken. So whenever multiple employees, I'm talking about one employee or multiple employees, they are thrown out. You are no more required. Even before the actual date of retirement, your services are no more required to the company. So whenever there is a layoff, multiple employees are thrown out of employment. That is known as retrenchment. It is not about one employee. It is about multiple employees who are not allowed to work. This can happen because of multiple reasons, like companies closing down. So one employee will lose the job or many employees will lose the job. Yes or no? Company has introduced a new machine, an automated production process. Yes or no? In that production process, what will happen? The manual work will go away. So the workers who are involved in that production process will no more be required because the work is done by the machine only. Yes or no? So one employee will be going out or many employees will go out. Yes or no? In the case of amalgamation, if the company gets closed down, if the new machines are coming, there are n number of reasons because of which multiple employees will lose their job. That is known as retrenchment. That is known as. Now see, your age of retirement is 60. Your age of retirement is. But right now, you are only 55 years old. Right now, you can work for 5 more years and earn the salary, but you are not allowed to work because you are being retrenched. So will you lose your employment right now? And as a result of loss in your employment, will you be able to earn the salary for those 5 years? Or you lose that salary also? So to compensate you for the loss in your salary, which you might have earned if you would not have been retrenched, the employer has to give you compensation. And that compensation employer has to give because there is a law in India known as Industrial Disputes Act 1947, which takes care of such type of situations. Yes or no? So as per the Industrial Disputes Act 1947, good morning madam, you go out and wash your face. And you also, Santosh, go out, wash your face and come. So tell me, one simple thing I am asking you. What was your age of retirement? 60. Was your age of? Right now, what is your age? 55. You are allowed to work or you are laid off? You are laid off. You are the only person or many persons like you? So it is an event known as retrenchment. It is an event known as, in this event, you are one of the employees. Yes or no? Who is now going to lose the job. And as a result of losing the job, will you be able to work for these 5 years and get the salary for these 5 years? No. So Industrial Disputes Act comes in the picture. That in the case of retrenchment, what did I say? In the case of retrenchment, if any employee is laid off, if any worker is laid off, so he is going to lose his salary which he was supposed to earn if he would have continued working for the employer. Yes or no? So that loss which is happening because of layoff, the loss in salary which is happening because of layoff, for that loss the employee needs to be compensated. And the compensation for this layoff which the employee will get from the employer has to give that compensation. There is a requirement under Industrial Disputes Act 1947, and that compensation is nothing but retrenchment compensation. Retrenchment. Now, if you are receiving retrenchment compensation, tell me, this retrenchment compensation is in lieu of salary which you would have received if you would have continued working. So if you would have continued working, you would have got the salary. But in lieu of that salary which you would have received, but you are not going to receive now. In lieu of that salary, you are getting this benefit. This is a profit in lieu of salary. This is a profit in lieu of your salary. It is as good as your salary only. Do you remember 17 subsection 1? The term salary includes wages, annuity, gratuity, and number 4, any fee, commission, perquisite, or even profit in lieu of salary is your salary. So tell me, the retrenchment compensation which you are going to get, is it your profit in lieu of salary? Is it your profit in lieu of salary? And it is salary. In your hands, it will be treated as your salary because it is profit in lieu of salary. Profit in lieu of salary is also salary. Okay. Now, if this amount you are going to get from your employer, there is one section 1010B. There is one section which gives the exemption for retrenchment compensation. So whatever retrenchment compensation you are going to get from your employer, as per 1010B, that retrenchment compensation is exempt. As per 1010B, that retrenchment compensation is exempt. How much? A, B, C, whichever is A, B, C, whichever is A, B, C, whichever is A, actual amount of retrenchment compensation. B, maximum 5 lakhs. And C, amount as per Industrial Disputes Act. Now what is the amount? The Industrial Disputes Act says that you should get as retrenchment compensation. Yes or no? For daily wage earners, the requirement is different. For weekly wage earners, the requirement is different. Yes or no? And for the employees who are earning salary on monthly basis, the requirement is different. So we are interested in what? The employees who are earning monthly salary. Who are earning. So the employees who are earning monthly salary from the employer, they should get retrenchment compensation amounting to this much, 15/26 of their last drawn salary, no, of their average salary for every year of their service. Do you remember? We did gratuity. Employee covered by POGA. Now the employee is covered by different law. Now the employee is not covered by POGA. Now the employee is covered by Industrial Disputes Act. So the law which was POGA, there also the same limit was there. 15/26 into last drawn salary per month multiplied by number of years of service. Yes or no? Same to same thing is here. 15/26 for every year of service, and instead of last drawn salary, now you are supposed to just take average salary. Now this average will not be for 10 months. This average will be for 3 months. So forget about the month of your retrenchment. Forget about the month of your 3 months immediately prior to that. 3 months immediately prior to the month of your retrenchment. Take the basic, take the DA. DA and basic. DA in terms also, DA not in terms also. 2 places you remember, please. 1 in gratuity, when the employee is covered by POGA. And 2 under the retrenchment compensation. In both the places, whenever you will calculate exemption, so to calculate the exemption, you will require salary. In that salary, don't take basic DA in terms and turnover commission. Always take basic and DA. Rest everywhere you can take basic DA in terms and turnover commission. Yes or no? So here you will take basic and for how many months? 3 months. 3 months immediately preceding to month of retrenchment. 3 months immediately preceding to month of. So last 3 months take the basic. Last 3 months take the DA in terms as well as not in terms. You will get 3 months salary. Divide by 3. This is average salary. This is divided by 26. Divided by, because 4 Sundays has to be excluded. So you will get daily salary, per day salary multiplied by 15. So 15 days salary based on the average salary of last 3 months should be given to the employee for every year of his service as what? Retrenchment compensation. This is the requirement of Industrial Disputes Act. So the amount as per Industrial Disputes Act or the amount of 5 lakhs or the amount of actual retrenchment compensation, whichever is lower, that will be the amount of exemption out of retrenchment compensation. Yes or no? Yes or no? Now pay attention. Now this number of years of service and everything, you know this, okay? No? Now see, if the retrenchment compensation is given as per the scheme approved by the government, sometimes in the case of retrenchment, sometimes if the company is closed down, sometimes there is amalgamation and all, yes or no? In case of huge organizations, governments also sometimes intervene. So if the government has intervened, then the employer will have to submit a scheme to the government that in the event of liquidation, in the event of amalgamation, there will be stakes of many stakeholders, including the employee, that will get affected. And how those affected stakes will be settled by the employer. For that, the employer will prepare a scheme, and that scheme will be submitted to the government. And now if the government has approved that scheme, so in that scheme only it will be written that in the event of liquidation of the company, few employees will lose their job and they will be given this much amount of compensation. That is given in the scheme itself. And that scheme, if the government has approved, and as per the approved scheme by the government, if the employee is getting what? Retrenchment compensation, that will be fully exempt. No need to do ABC, whichever is lower. Yes or no? So that retrenchment compensation, which is as per the scheme approved by the government, yes or no, that will be fully exempt under section. Getting my point? Will there be any requirement of ABC, whichever is lower? No, fully exempt. Now there is one more small case which I would like to discuss with you. See, employer is there, okay, and Nand Kumar is there. Now this Nand Kumar, no, I'm not talking about all the employees. I'm talking only about Nand Kumar, single employee. Yes or no? Now this employee, the employer has employment contract with this employee. Employer has employment contract with this employee. Now what if the employer terminates the contract or modifies the contract? Will he lose his salary? Yes or no? Am I talking about all the employees or only one employee? Only one employee. What happened with this employee? The employer terminated the employment contract. Your services are no more required, you can go, bye. Or your services are required as per the contract, you are supposed to work, but in the contract we wrote that every year we are going to give you an increment of 20%. We are modifying the contract and we are not going to give you any increment. If you want to work, you can work at the same salary for balance months, balance years. Yes or no? So contract was modified. Just because the contract was modified or contract was terminated, will he suffer a loss? Will he suffer a loss? What loss he will suffer? Because of the termination, because of the modification in the employment contract, he is losing his salary. He was supposed to work for these many years till the time of his retirement, but before that only the contract is terminated. So the salary which he was supposed to get for future years, will he get that salary or he will not get that salary now? So in lieu of the salary which he will lose, in lieu of the salary which he will lose because of the termination, because of the modification, the employer will compensate him. So can the employee get the compensation? Yes. Because of termination of the employment contract or modification in the terms of employment contract, even that compensation on termination or modification of employment contract is treated as profit in lieu of salary. But my dear friends, this is not retrenchment compensation. This is not. It will be fully taxable in the hands of the employee under the head salary if it is given by the employer. Yes or no? So employer is giving some compensation to all the employees on retrenchment or one employee only. And why he is giving? Because the Contract of employment is terminated or terms of the employment contract are modified. Yes or no? As a result of that, the compensation is given. That compensation is nothing but profit in lieu of salary which the employee is going to lose. Getting my point? So that profit in lieu of salary is his salary. Nowhere in the Income Tax Act it is written that it will be exempt. So it has to be taxable. Under the head, if the employee is receiving it from the employer. But this amount can also be taxable under the head IFOS. This amount can also be taxable under the head if the employee is receiving this amount from someone else and not the employer. Sometimes the employee will tell the employer that employer, if you will give me this amount, then it will be treated as salary. Why? Because it will be my profit in lieu of salary. Anything given by the employer to the employee for this termination, for this modification will be profit in lieu of salary, taxable for the employee under the head. So now what the employee will say? That employer, you have terminated the contract, you have modified the terms of contract. Okay, no, as a result of that, you are supposed to give me what? Compensation. If that compensation you will give me will be taxable for me under the head salary. Do one thing, no, you don't give me that amount. You don't give me that. You give me that amount through someone else. So there will be some arrangements made by the employer and the employee, and this amount of compensation, instead of employer giving that amount to the employee, employer will route this amount through someone else. Possible or not possible? And this was happening in many of the cases. That instead of employer giving this amount, employer used to make some arrangements. Because of that, the amount is not given by the employer, it is given by someone else on behalf of the employer. Now tell me, if Mr. X is giving that amount, is he your employer? So you will say that I am getting an amount on termination or modification of my employment contract, but that amount is not coming from my, so it cannot be treated as my profit in lieu of salary. It has to come from my employer, who is giving Mr. X, and he is not my employer. So don't worry, this amount will not be profit in lieu of salary. This amount will not be taxable under the head salary, since it is not coming from your employer. But now this will be taxable under the head IFOS. Understanding? Yes or no? So this was your retrenchment compensation. Now, voluntary retirement scheme. Have you heard about VRS? This scheme is also known as golden handshake scheme. This scheme is also known as, see, if the employer is there, if he is coming up with a voluntary retirement scheme. Now to reduce the number of employees in the company is a huge company, having thousands and lakhs of employees, yes or no? So these many employees were engaged because the business of the company was growing and many of the operations were done manually. So there was a requirement of huge manpower. So the company engaged many employees, yes or no? But over a period of time, the company has grown, the business has also grown, and many of the operations in the company are performed by machines, are automated. Now earlier, when the employees were engaged, at that time, there were not too many machines. The processes were not automated. So that time there was a requirement of these employees, and these employees were actually working also at that time. Yes or no? But now, since the company has grown, many automatic machines have come, many processes are automated. So now there is no requirement of manual work. But still these employees are there. Now these employees are not doing anything, sitting idle only, because their work is already performed by machines. Their work is already automated. So now these employees who were actually performing some work for the company are now not doing anything. They are just sitting idle in the company, on the chest of the company, and earning what? Salary, sucking blood out of the employer. Now the employer cannot directly throw them out. Because if the employer will directly throw them, it will affect the goodwill of the employer. Why? Just imagine if you get a news in the market that this XYZ company has removed 12,000 employees. What first impression you will get about that company? Company might be in losses. Yes or no? But actually the case is not that. The company is not in loss. To save the cost, etc., to avoid the losses, etc., the employees are not thrown out. Actually, they are thrown out because there is no requirement. Right now, if you will see, you might be getting news that Google is laying off these many employees, Meta is laying these many engineers. Why? Because of AI. Many of the employees are now replaceable. Yes or no? And that does not mean that the company is, incurring losses. Company is in good profits. Now, if the employees are retrenched, they are thrown out, it will create a bad impression about the company. Goodwill of the company will affect. And definitely, the prices of the shares might also fluctuate in the market. Yes or no? And these many years we have created a goodwill, and now these employees will go out and start uttering bullshit about the company if they are thrown out. So the company has to become very careful. Now see, instead of throwing you out, instead of telling you, please get out, no, the company will, mildly say you, with respect, please take a leave. Your services are no more required. Voluntarily take the retirement even before the actual retirement date. Yes or no? So voluntarily you are told to take the retirement. So the company will prepare a VRS scheme, voluntary retirement scheme. In that scheme, the employees will be covered. All the employees will be covered. Yes or no? Except directors. Except, why directors are not covered? Because if all the directors take the benefit of VRS, hello, then who will run the company? The board will become empty, no? Hello. So except the directors, all the employees are given the option of this scheme that if your retirement age is not yet arrived, you are still supposed to work for 2 years, 5 years, 7 years more. Yes or no? If you want, you can take the early retirement on a voluntary basis. So to give you the voluntary retirement, to give you the option of taking the retirement earlier, the scheme is framed. Who will frame this scheme? Who will frame this scheme? Employer. And the scheme has to be framed by following the prescribed guidelines. What? Following the prescribed guidelines. And the guidelines are given in? Given in? Who will follow these guidelines? Employer will follow the prescribed guidelines and prepare a scheme of voluntary. Now, what are the guidelines given in the IT rules about framing this scheme? None of your business. Just remember that there are some guidelines in the income tax rules. These guidelines must be followed by the employer while preparing the voluntary retirement scheme. Now, under this scheme, the employees will be covered. All the employees will be covered except directors. Now, the employees who are covered under this scheme, they will be given an option. They will be given that even before your actual retirement date, you are eligible to take retirement right now. You are eligible to take don't worry. Whatever gratuity, pension, leave salary, whatever retirement benefits which you were supposed to get at the time of your actual retirement, you are going to get all the retirement benefits right now only. Yes or no? So are you going to lose your retirement benefits? No. All the retirement benefits you are going to get. But instead of getting those retirement benefits after few years at the time of your actual retirement, you are going to get those retirement benefits right now only. Hello? And please take the leave from the company because the company wants to reduce the number of employees. because having these many employees has become difficult for the company to manage these many employees. Your services are no more required. So take a exit from the company respectfully. Yes or no? Otherwise, we'll have to throw you out. So exit will be taken respectfully. So for that, the employees who are going to get covered, are they going to take voluntary retirement? Yes or no? Now at the time of taking the voluntary retirement, the employees who is getting covered will take the voluntary retirement, meaning actual retirement age is 60. Actual retirement age is, and right now the age is 55. Right now the age is. So will you take the early retirement? Why? Because after 5 years, you are going to get retired. After 5 years, you will get retirement benefits. So all those benefits you are going to get now only. But still the employees will not take the retirement. Why? Simple. Why would I take the retirement early if I can earn the salary for next 5 years? If I can be in the employment and earn the salary for next 5 years, why would I take the retirement right now? Why would I lose my salary for next 5 years? Yes or no? So the employer will tell you, don't worry, the salary for those 5 years which you are going to lose because of taking the early retirement. Yes or no? That entire salary we are going to give you as VRS. What is this compensation? This is given to you because of the loss in your salary which might happen due to taking the early retirement. Yes or no? So this VRS compensation will be given. Can I say this VRS compensation is nothing but profit in lieu of your salary, future salary which you might lose because of taking early retirement? Yes or no? So this VRS compensation will not be a very small amount. This will be a huge amount. This will be a, just imagine if your salary per month right now is 1 lakh. How much is your monthly salary right now? Sure, no? Multiplied by 12 months. So how much salary? 12 lakh yearly salary you are supposed to get. How many years of employment still there? 5 years multiplied by 12 lakhs. 60 lakh is a small amount or a huge amount? You will be paid 60 lakhs upfront right away. Take this 60 lakh and leave. We'll say, wow, even without doing anything, I'm going to get the salary for next 5 years as a VRS compensation. Is it a small amount or a huge amount? Just imagine if some employee who is earning 1 lakh rupees right now, who is earning, he has 10 years of service remaining. How much amount he is going to get? 1 crore 20 lakhs. And what if the amount of salary was even higher than 1 lakh rupees? So the employee will get a huge amount, decent amount as VRS compensation. Getting that salary in small amount over a period of years and getting that entire amount right now is better, no? 1 rupee in future, is that 1 rupee better or 1 rupee in the present it is better? Time value of money, you know about that or not? Now you will say, sir, what benefit the employer will have? He is going to pay the entire salary for the 5 years, no? Still the employer is in benefit because he was not supposed to give you 1 lakh every year. Every year your salary would have increased by 20%. So this year he was giving you 1 lakh. Next year he would have given you salary 1 lakh 20. Next to next year 1 lakh 44,000. Likewise your salary would have increased. Your benefit would have increased. So the cost to the employer would have increased. He is saving that increase in the cost. So employer is also benefiting. Getting my point? At the current salary level, we are going to give you the salary for all the years of your service remaining. Yes or no? That is your VRS compensation. Now this VRS compensation is profit in lieu of, meaning it is also your, now this VRS compensation will be exempt under section 1010C. Now how much exemption? Actual amount of VRS compensation or maximum? And now this is not LTME. This is once in a lifetime exemption. Once in a, meaning once in your lifetime you can take this exemption up to 5 lakhs. And once you have taken this exemption in your lifetime, now next time whenever you will get VRS compensation, that will be fully taxable. That time it will not be exempted. Will you remember this? Hello sir, will you remember? Now pay attention. Now what is the amount? 5 lakhs, maximum 5 lakhs. And limit C and limit D, last drawn salary per month multiplied by number of completed years of, meaning they are saying that 3 times of your last drawn salary should be given to you for every completed year of as your VRS compensation, or last drawn salary per month should be given for balance months of service as your VRS compensation. So now tell me, right now what was your salary? 1 lakh. And your retirement age was 60. And what is your current age? 55. So how many years of service are still remaining? In these years of service, how many months of service is still remaining? 60 months. So 60 multiplied by 1 lakh. This will be 60 lakhs. Yes or no? Or what was your last drawn salary? 1 lakh. 3 times of that, 3 lakhs. For every completed year of service, meaning the year of service completed by you so far, 20 years. How many years? So 20 years multiplied by 3 lakhs will be 60 lakhs. Or can I say the number of completed years of service was 25? It was 25 multiplied by 3 lakhs. It will be 75 lakhs. Yes or no? So you can get this amount also as your VRS compensation, or you can get this amount also as your VRS compensation. This is given in guidelines. Guidelines prescribed for VRS compensation. Yes or no? Now pay attention. A, B, C or D, whichever is. Here number of completed years, you will ignore the fraction of year. You will ignore the fraction of the year of service. Even if the fraction is more than 6 months, you are going to ignore, because you are supposed to take only completed year. And here last drawn salary you are supposed to take. What are you supposed to take? So the month of taking the voluntary retirement, immediately preceding to that month, what was your basic? DA in terms, turnover commission. Because these are not the limits as per any other law. These are not the limits given by Payment of Gratuity Act. These are not the limits given by Industrial Disputes Act. These are the limits provided in Income Tax rules, Income Tax Act. So whenever there is a limit provided by Income Tax rules or Income Tax Act, in that limit, whenever you see salary, salary always includes basic, DA in terms, turnover commission. So basic, DA in terms and turnover commission for which year? Which month? Month immediately preceding to month of retirement. Month immediately preceding to month of. So your retirement, voluntary retirement month was December. Ignore December. Take the basic, DA in terms or and turnover commission for which month? November. That is your last drawn salary. Multiplied by 3, multiplied by number of completed years, or multiplied by balance months of service. A, B, C, D, whichever is lower, this amount will be exempt out of your VRS compensation, and the balance amount will be taxable. Will you remember this, everyone? So this was your VRS compensation. Now one important thing, if you are taking the exemption for VRS compensation under section, you cannot take the relief under section 89. And if you are taking the relief under section 89, you cannot take the exemption for VRS compensation. Both the things cannot be given together. You have to choose any one. If you are taking 1010C, forget about relief. And if you want to take relief, forget about 1010C. Then your entire VRS compensation will be taxable and you will get the relief under section 89. Yes or no? If you are taking the exemption of VRS compensation under section tendency, then even if you are eligible for relief, you are not going to get the relief. Yes or no? So relief under section 89 and exemption both cannot come together. Any one will come. Yes or no? Now, the next part and very important part is perquisite. Yes or no? But wait, do you remember that provident fund is also there? Retirement benefit, provident fund is also there. That provident fund discussion we are going to do in the end. But first of all, let's finish with the perquisite. Now see, perquisites, if you will see, I have given the list of perquisites here. Okay, this is the list of perquisites. 17 subsection 2, clause 1, clause 2, clause 4, clause 5, 6, 7, 7a and 8. And clause 3 was missing. Clause 3 I have written here. Okay. Now all these perquisites which are there, these are your salary only. These are their value will be taxable under the head salary. But all these perquisites, valuation is not required. Valuation is required for accommodation, for motor car facility, for medical facility, likewise. Out of all these perquisites, few perquisites are very important. We are going to focus on those perquisites. Yes or no? Like accommodation valuation, I will teach you. I will teach you the valuation of motor car facility. Yes or no? Likewise, 2-3 more important perquisites we are going to discuss. Because those are repetitively asked in the exam. Other perquisites, valuation is not that important. The value they will only calculate and they will give you in the question. You are supposed to take that value and charge it to tax. Getting my point? So our discussion here for perquisites will be limited. But don't worry, you will be able to cover each and every perquisite with me. Okay. So first of all, tell me, what is perquisite? What is the meaning of perquisite? Perquisite means additional personal benefits. Additional means you are getting salary from the employer. You are getting salary from the employer. Along with the salary, the employer will give you some extra benefits, personal benefits. So salary you are getting, but in addition to salary, some personal benefits will also be given by the employer. Those benefits of personal nature given by the employer in addition to your salary is known as what? Perquisite. Is known as those benefits. Now, see, these personal benefits can be monetary also, can be monetary means cash perquisite. Non-monetary means kind. See, if the perquisite does not require valuation, if the perquisite does not require, then they are known as monetary perquisite. And if the perquisites require valuation, they are known as non-monetary. Yes or no? Hello? Pay attention. Now there is a very small difference between perquisites and allowances. Now what is the difference? I'll tell you. See, sometimes the students get confused between allowance and perquisite. Do you remember I told you allowance? What was the meaning? What was the meaning of allowance? Tell me. Additional amount given on regular basis. So there is a fixed amount which the employer will give on a regular basis in addition to salary. Do one thing, take a break for half an hour. We are meeting after half an hour. Okay.